Good afternoon. Welcome to the Thursday, January 18th, 2024 Public Finance and Audit Committee meeting of the Kingston City Land Bank. My name is Mike. I serve as the Executive Director. We ask that members of the public limit their comments to no more than 2 minutes per speaker. And with that, I will turn it over to our agenda, which first stipulates that we elect a committee chair. So I will try to run this until we have a committee chair, possibly.
Yeah.
All right. First, is there a motion to vote on a committee chair position? Can I hear
I'll
motion?
move.
So moved by Rebecca. Thank you. Do I hear a second?
I'll second it.
Seconded by Aaron. Thank you very much. We have a vote to elect the chair of the Finance and Audit Committee for the 2024 calendar year. How do you vote?
So I think historically, right, it doesn't have to be this way, but historically, the treasurer has also served as the chair of this committee. So it was me, and before me it was Bartek, I think. No, Nate. So Rebecca, I don't know if you'd be open to that.
Sure. I actually don't know what the duties are, but maybe you and I can have a conversation at some other time.
Certainly.
And we'll figure out what the best you could hand off if that's appropriate.
Happy to do that. Happy to do that. I think generally the duties involve just going through the agenda and then circulating an agenda beforehand. And if you don't remember to do that, Mike usually picks up the slack of committee members like myself who forgot on occasion.
Are you on the committee still?
Yeah, I'm still on the committee.
Oh, continuity is such a brilliant thing.
So I guess on that note,
if elected, I will serve.
I will nominate Rebecca be the leader of this committee.
I can't second myself, can I?
Do I hear a second? So second. Thank you, Barbara. Barbara with the second.
Can I second? Yeah.
So moved. Rebecca, congratulations. You are the chair of the Finance and Audit Committee for 2024 Kingston City Land Bank.
There's not a vote?
Well, let's take a vote, I guess. Okay.
Well, I mean, if we're going to do it, do it.
I don't have voting privileges, right?
So,
no, you don't.
All in favor?
All in favor, yes. 1, 2, 3, unanimous. Congratulations, Rebecca, as previously mentioned.
Because I want more responsibility is really what I'm looking for.
Totally. And with that, I think I might turn it over to you as the chair, Rebecca. The rest of the agenda is quite brief, but full of content.
Well, I haven't found the agenda yet since I was prepared. So if I could endow you with the rights for this meeting to the agenda, that would be great.
Greatly appreciated, and I will do the best that I can. So the next agenda item would be to go through the financials, which Stacy has prepared amazingly, as always. Stacy, I had put the KCLB first, if that works for you, or however you'd like to jump in. Okay.
Sure.
Would you be able to pull it up?
Oh. Okay. I thought you were going to pull it up. Yeah. Let me go and find it. I have many versions of it, so give me a second.
I can.
Because I do based on drilling into the QuickBooks itself, so that I have like so if you could you pull up what I sent so that I can have.
Sure. Which one would you like?
The one that
profit and loss or the balance sheet?
Let's go for the balance sheet first.
Okay, give me 1 second.
Thank you.
Sure.
I did pester Stacy with a couple of questions about terminology and what some things meant. So,
yeah, I'm just getting back to my desk now, so I see that you sent me an email this morning, but I hadn't had the chance to.
That's fine. I'm just trying to understand more about the KCLB MEDA LC, but you should. Off you go.
Okay, so this is the balance sheet, and I have it just this time is just seeing the whole years. So at December 31st. where we stand. We have a few bank accounts. We have right now a CD that's going to mature next month, and that's also on the agenda. We're going to talk about that afterwards. And then we now, beginning in October, we have something called a sweep account, where our money in our account in M&T is every night it's invested and comes back the next day with interest, which has been fantastic. So that's what the M&T sweep account is. I'm starting to see you're sharing a lot of stuff, Mike.
No, I'm sharing the wrong thing. Give me 1 sec.
Okay.
Let's try it again.
Okay.
All right, we're back. Should be back.
Okay. And so then we have some accounts receivable. And I'll tell you what that is in a moment. I'll get to that part. We have some grants that are we're awaiting the money for. So that's what is in the pledge receivable. We have reimbursable grants, meaning we have to spend the money first and then we ask for reimbursement. So it is considered due to us, even though we haven't received the money yet. It's just the way that the accounting principles have. So that's what's in that 110. There's the LBI 1, LBI 2. That's in part of that.
LBI being Land Bank Initiative, Barbara, which is a state.
Sorry. Yes.
It's all
Thank
fine.
you,
It's
Aaron. I know we get
state-
these acronyms, right?
a state
Yes, Land
initiative to
Bank
provide
Initiative.
operating funds to land banks. Yeah.
Yes, we have 2 grants that we are currently involved in. LBI Land Bank Initiative Grant 1 is $200,000 a year. We get reimbursed quarterly, so $50,000 each quarter. And then we have the Land Bank Initiative Grant number 2, which is a reimbursable grant that we get reimbursed based on we decide when we're going to ask for reimbursement, and we want to not bother the person who's who is reimbursing. She's got a lot of land banks to deal with, so we try to get it, spend a lot, and then ask for reimbursement.
How much is the grant?
That one is 1.8 million.
A year
And
or once?
No, it expires in at the end of 2024. We need to spend it by the end of 2024.
You have to spend it by 2020.
The end of 2020, yeah, this year.
Okay.
Mhm.
Thanks.
So Kyle and Mike have a whole projection on that, and we can, we wanted to talk about that, and another time we could do that to see where we stand and what is projected on that. So then we go down and we have there's an amount that goes back and forth between the parent, which is KCLB, and the partnership, KCLB Maida. Right now, it's because in the KCLB Maida, we get reimbursed for expenses from the mortgage, CPC, the bank, and we need a little bit of funds in there so that there's some spending that happens before we get reimbursed. So there's just money that goes back and forth. So that number changes. But by the end of the project, that will be zero. Maida Legacy Cities will have paid back the Kingston City Land Bank. Then the next is the $500,000, which is KCLB Maida LLC. That's the amount, that's our asset. We have equity in that partnership for $500,000. The undeposited funds is just a deposit in transit. The next is a list of our properties. And you can see every time we spend money to enhance its capital asset, increases the basis. Right now, you could see the basis, our highest basis is in Franklin, which is due to sell or shortly. So that's what's happening there. You could see that the Third Avenue project, it's got also, actually that has the highest basis right now. And it will increase as we go. We're in the process of building our website. Right now it's $12,000. We will depreciate that when the accountants come back with their journal entries to do that. Then we have accounts payable of 28,000, and that has to do with we have a rec out for Franklin Street, and that's what that represents. Maida has spent the money and has given us a requisition, and it's just the timing of when we pay it. So it comes in, I record it as a basis increase and accounts payable, and it was paid yesterday. So that goes to zero. You want to move to the does anybody have any questions, or should we do questions? Mike, what's your thoughts?
Question sounds good to me. I'm just trying to buy time while I pull up the next one. So I'll pull it back up.
I mean, I have a lot of questions, but I don't know that this is the appropriate time. But if you could give me 5 words on the relationship between the Kingston City Land Bank Maida LLC and the parent company, like, is there any way to describe that in 5 words, or is it like an hour-long conversation?
The Kingston City Land Bank is a partner in the special entity, which is the Legacy Cities entity. It's very complicated, so it's probably not a 5-word. I know, Mike, can you dial it down to 5 words?
That's right. I can find it out another time. I'm just interested at some point understanding, since I now have dual hats, how money flows from one to the other, right? That's all.
Oh, it
And
doesn't.
how success or failure of that relationship is like, I don't understand. I understand why you might have it, but I don't understand how to assess it. So we'll look at it some other time. That'd be great.
Okay.
Well, just to say, if I could, they're related entities, right? It's a subsidiary company, and there's no cash that passes back and forth. Just so you're comfortable with that.
Well, the cash that passes back and forth is just if there is a need for. It's small, right? Just to kind of fund it before that. But at the end of the day, if everything was planned properly, there's no cash call coming in. That's how it's been budgeted. There's going to be no cash call. That's going to happen from Kingston City. But we have put in $500,000 as equity, and that's all part in the details. It's a very big document, and I'm sure Mike can share it with you, of how it all came together.
I was just my short question was really that that at the end of the day, when the project is finished, there are assets that'll be divided, profit or assets or money or something that'll be divided between, or it doesn't, to Maida and the Kingston City Land Bank. Is that right?
So there's a developer fee that's divided as a part of like the Legacy Cities deal, which is, I can't remember, some percent of the development cost. But at the end of the day, there won't be leftover assets because the properties will be sold and the loan paid back with the proceeds of that sale. And so the entity will have no assets anymore.
Maida takes away the developer fee.
We split it 50-50.
Okay, thank you.
Yeah, we split the developer fee 50-50. We're technically a 51% owner in the entity, but the fee is split 50-50. Mike, that's correct, right? Yeah.
Okay, thank you. That's what I wanted to.
Yeah, of course.
So here we are with the profit and loss. This is interest income is just actually just for part of the year, because again, we didn't start the sweep account until October. Then we have grants income here, and I'm gonna drill into that into for myself on my end. Um, Okay, so we've gotten grants from foundations, the state, and some local, and that's what's included in the grants income. Um, we have we had a nice year end with the donations. Um, it was good. It was good. Last year we also had a good run, kind of similar. I mean, in 2022. And then the property sales. So we sold
That's just one. Which property is that? Which property did we sell?
we sold two. We sold. I'm just reorienting myself to it.
Oh, Hamilton would be one. That was
Yeah,
earlier this
we
year.
sold Hamilton and we sold Henry.
That's
Those
right.
two. Right.
Right.
So we sold those two properties in 2023.
Hamilton
then-
and what was the second word?
Henry.
Henry.
Okay,
Mhm.
thanks.
Is that right? Is the sale income, property sale income is, it seems, oh no, because there was only 25,000 for Hamilton. That's right. Never mind. That's
Yeah.
correct. Okay.
Yes.
Yeah,
Yes.
yeah.
Yeah.
I'm mixing the numbers. Yeah.
And then you can see in here, we earned a developer's fee. So this is where where it comes in, Rebecca. So this is where we split. So we got $24,205 for each property that's sold in Maeda. So we'll get the same thing when the other two sell. And this becomes income to us. And Maeda got the same. And then we have our office expenses, our operating expenses. All the way down, I split out. This is in next year for 2024. We're going to put up into the financials the budget, so you can see actual versus budget. For 2023, it was before I started that the budget was put in, and it didn't correlate to the financials, so it wasn't helpful in that information. But on totality, but all of these expenses that we're seeing here are in line with the budget that was made. So you could see, some of the bigger expenses are legal, accounting, over here, insurance. Then we go down and we can see we have educational, again, travel, all in line with our budget. Repair maintenance is just an offshoot. That was when we had to fix something at a property. Probably should go down into the property cost, which I can adjust. Then we have we were in 2023, half the year the staff was consultants, and then we went and became employees. So you could see that's the difference in there between the personnel expense and the payroll expense. And it just that way in the financials for the accountants used to be able to tie into W-2s and all that.
Gotcha.
And
Makes
then we
sense.
have a due diligence, which biggest amount is in the environmental part. Is when we're doing all of our testing for the new properties that we want to, some of the new properties that we have, some of them that we want to purchase. Then we move down into the property cost. Closing cost was what we paid when we sold the properties, two properties. And then the next thing is the stabilization and the security, which is what we've been this year. It's pretty new that we've been securing our buildings much better. And we have we pay for all the landscaping and snow removal on all our properties. And then you move down, the cost of properties sold is what the cost of those, the basis in those properties that we did sell. That's how much we put into those properties. That's how much it cost us. So we netted, we had sales of 180. If you go back up for a second, Mike, I don't mind to go. Yeah, 184 was what we got from the properties, and we actually spent on those properties. The capital assets basis to it is down at the bottom, which was 20,000. Then you can see the next line item is the legacy subsidy. We subsidized 2 of the houses to make it a more affordable situation. And that was, Mike, is that? Yeah, go ahead, Aaron.
Oh, no, go
Can you
ahead.
speak?
Oh, that was just a choice we made based on the subsidy that we had from the state and the size of the loan. We the we were going to have to sell the first 2 homes for over $200,000, and the board wanted to sell them for below 200,000, and so we put forward our own money as additional subsidy to buy down the end cost of the homes, essentially.
I'm sorry, I don't understand what you just said.
So-
I mean, I
so-
understand that you subsidized, but your own money, meaning it didn't come from the legacy
no,
money?
like the land bank. So on the for legacy cities, right? We have 2 sources. There's subsidy from the state, and then there's a loan from CPC. And the subsidy from the state isn't paid back, but the loan is paid back based on the sales price of the homes. When it got time to sell the homes, we were going to have to sell in order to pay back the loan entirely. We were going to have to sell the homes for like 221,000 or something like that. And the board had a conversation about that number, and we decided we wanted to be able to sell them for below 200,000. And so we had a small amount. Mike and Stacy looked at kind of what funding we had that wasn't allocated, and we had a conversation about taking kind of some portion of our unallocated funds and applying it and using that to offset some of the costs for the homeowners. So we essentially help pay off our own bank loan rather than just using the homeowners their mortgages.
And that figure is that process is reflected in this legacy subsidy number?
Yeah, for the 2 homes, we spent like 20. It was like 21 change or something per home as a board. We decided to do. It was a vote. I can't remember what month it was, but it was at a board meeting sometime in the spring.
Okay, got it. I got it. Thank
Yeah,
you for
of course.
clarifying.
When do we want to go to next, Stacey?
Let's go to the Kingston KCLB Maida balance sheet, please.
Got it. Got it. You should see it.
Okay, so here we are. We have some money in the bank to kind of just $25,000, which is, again, paying for things that comes and goes. We have 2 houses still on available, and that's the amount that we've put into each of those houses. Hurley is 100% complete, so that's all you're going to see for Hurley. And Rogers is still being completed. These are all in line with budgets for each of those projects. Then we have due from escrow is just some extra money left over from closings that the lawyers gave back to us this month. The next is the current liabilities. So the accounts payable is mostly the amount that the requisition came in from Maida, and we haven't yet paid it out to him. It is paid out now as of today, but at December 31st, it was not. Then we have the retainage payable, and that's the amount we're holding back from the contractor as part of the contract. once he fulfills those obligations, that will be released to him. And then in the long-term liabilities, that's the amount that we owe the bank at December 31st.
All right.
Right, and then the next is the profit and loss. And in the profit and loss, you can see the components in the income. So those are the property sales for the 2 properties. Each of those properties was sold for 210. This is what Aaron was talking about. Then we had to put that subsidy in to kind of make it work. And then the HTFC gave a subsidy for each of 150,000. So that's what makes that our income.
HTFC means
H
Housing Trust Fund
Corporation.
Corporation. That's the word.
from the state, the universe.
Yeah, it's from that. It's from the state.
Okay, thanks. State of New York, as it were, right?
Wyoming decided to fund affordable housing in Kingston.
And then the cost of goods sold there is what it cost us to for those buildings to bring them to point of sale. So then we move down and we have our operating expenses. The big operating expenses for this entity is the bank charges and the interest fees there. So that's what brings us to that $39,000. Then we have insurance, professional fees, which is made up of some legal and bank fees. The legal mostly from the bank as well as some of the all the closing costs are lower down here. Give me 1 minute. Just hop into that. Okay. Some of the legal and professional services are the architect's fees and the tax return. That's what's the 4,400. Then we have closing costs. That's again title and all the costs that usually a seller pays. Then the utilities for those properties and the 4 properties, and then the soft costs are made up. There's a lot of different things involved. Those all get approved by CPC, the mortgage company bank, and gets reimbursed to us in the form of giving us money to pay them. So it might be advertising or trying to think what else is in there, would be in there. It's mostly advertising and landscaping as well for these properties. That's what that represents. And then you can see at the bottom, there's the developer's fee. So the developer's fees is 48,000 for each property and divided by 2. 50% goes to Maida, 50% goes to Kingston City Land Bank. And that's it.
Maybe it's worth noting on this too, Rebecca, maybe to your question earlier, this bottom line here would be the distribution on a partnership level from a taxable standpoint. It has to be verified by our accountants. But it's interesting to note that to close on this project at the time, we were required to partner with a MeeBee certified general contractor, and we did. We were required to split our developer fee, and we did. And so those are both benefits to them professionally, but they also receive a taxable loss, which is, if that's what the accountants verify, which we believe they will, that's a third benefit.
I'm thrown out of this room.
I'm sorry. Oh, he's changing rooms. Okay.
He's thrown out of the room, I think he said.
Can you say the tax part again? Because it got muddled with Aaron.
Oh,
moving.
sure. Yeah, so the 108,336.91
Yeah.
is the partnership's sort of bottom line. And so that gets split. That loss gets split 50-50 out to the partners. And so Maida would have lost from a taxable standpoint, despite having received the developer fee, the 2 developer fees so far. For their taxes, they would have still lost money, and they can count that against their global tax position. So it's just another benefit to the partner that we were hoping to favorably work with and give them a leg up. So that was the point I was trying to make.
Okay, great, thanks. And I was confused about soft costs, but now I figured it out. I figured it out. I just didn't understand the approval, but you have to get those costs approved by the mortgage holder. That's right. And then they get reimbursed, right? That's what that meant. Yeah.
Well, we
part.
spend those. Yeah, we spend that money. We already have spent that, and we call it soft costs. It's a line item for them. That's how we have it, because we have the hard costs are approved by the applications to pay, and then these soft costs are on the side, and it's stuff that's already within the agreement of how this project's going to work. So yes, those soft costs have to be approved before we spend them, but we spend them within what we know is going to get approved. We're not going to go and spend money that we're not feeling like we're going to get reimbursed for.
Okay. Just qualitatively, well, perhaps I'll ask this question another time. Never mind. Awesome.
Next item on the agenda, having talked through the financials, is our CD. We have a certificate of deposit that approximately 7 months ago, I think we signed up for an 8-month CD with the board's approval, of course, at a 4.65% interest rate that has been helpful to us. It is coming to term, and so Stacy and I had talked through numerous number of options, including me hearing local radio ads that advertise different rates and different things. But I think we have a good solution to this. I don't know, Stacy, if you want to walk people through that. Excuse me, I get a call.
So interest rates are coming down, and so our CD is not going to mature until the 8th of February, between now and the 8th of February. I'm sensing, based on what I'm seeing with other clients of mine, that the interest rates are coming down. So we thought we would go and get a CD right now, another CD for the 5% before the interest changes, and then when the other one matures, we just roll it back into our operating account. So kind of not we're capitalizing on the interest rates going down. If we wait longer, we'll probably get a lower rate. And the sweep account that's happening right now, we're still getting interest on our regular account, but that's at 4% right now. So we think the extra percentage is worth it to just take that money and open a new CD, and then the other one is going to roll out and go back into our operating account.
We don't think we need that cash in this 8-month term, but if we did, the penalties would be to forego that month's interest for 1 month.
Yes.
So there's not a giant break fee. There's not the way that this was discussed and approved the last time is that it's as good as a cash investment as far as being able to come out.
Yes.
No change. I think we should probably bring this to the board like we did last time, just to get everything tacked and tied on Monday. Just to bring people in the loop for what we're doing, so there's no question. If everyone agrees, be my recommendation. Just okay, cool.
Makes sense.
Will do. Awesome. The next item and last item on our agenda is to discuss the 2023 audit and financials. Stacy and I had put together an RFP, which I'm sure everyone read and poured over and was very excited. Rebecca's nodding. Somebody read it. So this is for context. This is the first time that we've done this in approximately 4 years. In 2018, when the land bank was formed, before any of us were here, the city put out an RFP for a 3-year term. And so EFPR was the firm that it was awarded to. We worked with EFPR for the first 3 years, and then due to the fact that EFPR was now finally aware of how to do what we were doing, and we were splitting into new special purpose entities, and there was no other group that would have been able to continue to work seamlessly with Stacy just having gotten started with the land bank. We continued with them for 1 more year, knowing that we would have to issue this RFP. So here we are. We solicited a 1-month RFP publicly on our website, advertised it in our newsletter, I believe, and received 1 response, which was sent to you. Stacy sent to you earlier this week. And I don't know, Stacy, maybe take it from there, but we feel it's a good proposal. It's under budget.
Yeah, so again, what's helpful is to use the same accountant, so you're not sort of just starting from, spending a lot of time orienting them. So it would be a lot of my time orienting them. But, last year we worked very well together, so I was pleased that they had responded and it came within our budget. And this year we'll have an earlier start on getting it started. They want to start the audit February 4th, I think they had said.
It is.
And
Yep.
Which is great. Like last year I started in November. There's no way I had got the books understood to be able to get it. So this year I feel like that's the good part. And then I think it'll save time, and then we'll get if we started with new accountants, my opinion is that we might be pushed to the back burner. So I feel like staying with these accountants, they understand everything, they're within our budget, and I believe we're going to get our financials much quicker, and we'll get all our reporting checked off early, and that will be a nice relief for us, right, Mike?
Yeah. It is. I think we've really come a long way in the time that you've been here, Stacy. You've educated me on all the things that have to be done in a timely manner, which we were trying our best previously, but certainly I feel like we are in front of it for the first time. So thank you for that.
All right. Sure. So what is the process? Does the finance committee have to approve?
I think so. I think the finance committee should discuss and approve to move to the board for the board meeting. Just for context, Barbara, our procurement policy requires that we take out to bid, or we solicit proposals for anything expected to be over $5,000 in a contract year. And it requires us to conduct an RFP for anything that we expect to be over $10,000. So this is the spirit in which we're following our bylaws. The board has to approve those contracts above that amount. And so I would recommend the board consider approving taking this proposal to the board for a vote on Monday.
I do have a question, only that the RFP was for 2 years of auditing, 23 and 24, right? That's correct?
Right, correct.
And that the auditing expenses for the 2 years are cut into 2 pieces, 1 piece for the general audit and 1 piece for the MEDA partnership audit?
Correct.
Good. Okay.
No, I'm sorry. No,
No, that's
it's
not
not.
right.
So the partnerships cost is just to do the tax return that you see in that. So they don't
That
have to
might-
have an audit. There's no audit that needs to happen for the MAIDA entity itself. MAIDA entity has to be brought in to the audit for the KCLB. It has to be, because it's a combined entity.
So the $900 is for the tax return that gets, and then just for the tax return, right? The partnership return of income, New York State partnership return, right?
So is a federal and a state tax return that has to be prepared for the partnership. Yes, it's a for-profit entity that has to file, yes, with the IRS in New York State.
Right.
So that
answers my second question about the partnership, which is that it's a for-profit entity underneath the umbrella of the not-for-profit Kingston City Land Bank. That's correct?
Yeah.
Okay.
That's a requirement. That's all affordable housing deals work that way. It's a requirement of the lenders. that they're structured with in this kind of strange counterintuitive way.
Thank you.
Yeah, of course.
Well, do we need to do any Robert's rules? I mean, I think it looks great. Shall we take it to the board? What do you think?
Do I hear a motion to move
I
the,
have a motion to take this as in an affirmative way to the board. I don't know, to recommend
So
it,
mo-
recommend it.
I'll second the
so
motion.
moved and seconded by Aaron? Thank you. All in favor? That vote is unanimous, 3-0. Thank you. Great.
And
All
I'm
right,
sure
well, that
it would
was-
be excellent to have continuity. Right,
Yeah.
that's a really good thing to support.
Yes.
That's-
Yeah.
They're
Barbara, you
excited
keep
to get going.
Quiet. How you doing, Barbara, at this first meeting? Are you?
Maybe I'll-
Yeah,
Wait,
I'm
let's-
taking a lot of, I'm
Maybe
taking a
I'll
lot of
end the
notes.
meeting.
let's close. Yeah, let's close the
Yeah.
close the public portion of the meeting. and then we
Okay,
can-
so moved.